Well, today I'm going to teach you how to trade more efficiently. This is very simple and effective trading strategy by which big capital takes assets away from you and me. If you understand the logic and follow these rules, your trade win rate will greatly increase. The concept we are going to talk about today is called power of 3 or simply PO3. What is PO3? Is accumulation, manipulation, and distribution. This concept works both on a daily time frame where we have full range stop hunt and subsequent distribution, and even within a single candle such as a daily or weekly candle. This is due to the fact that the market is fractal. The older time frame is part of the younger one and vice versa. And no matter what time frame it is, everything is subject to the same rules. In the chart, you see a weekly full body candle. On a smaller time frame, it will be a full-fledged candle. We will consider this example throws a weekly candle, so it will be easier to understand the logic of this concept. Until the moment when the distribution begins, the position accumulation begins. It may be an accumulation of long or short positions. In this example, you see a bearish scenario, but even in this one, the consolidation marked in green is called an accumulation. Although, as you may have heard, accumulation always leads to growth and the distribution always leads to decline. In this context, it's a little different. The above examples were on the 4-hour time frame. Here you see full body flagged trends, but if you look at these same examples on a weekly time frame, instead of these cycles, we will only have one candle. First, we will look at bullish example. When the weekly candle opens, we want to see a consolidation. After that, manipulation and distribution. In the first days, the price trades near the opening candle. Then there is a manipulation on the weekly time frame. It will look like a shadow at the bottom. The final phase is the rise and close of the candle. The bearish example works exactly the same way, but in the mirror image. We also have a consolidation near the opening of this candle. Then the rise, which is actually a manipulation to get traders to trade in the wrong direction. And the last stage is distribution, which we can understand as a big player distribution his position to regular retail traders. Now let's think and answer the question, why does PO3 work? It's very simple. Big capital has a lot of money and he can build up this position with one order. After all, if he buys a large amount at once, he will simply move the price. To do this, the price is clamped in the range, so ordinary traders become participants of this fascinating game. As a rule, the bulk of traders place stop orders where they have been taught in books. It is in such consolidation that the assets goes weak hands to strong hands, as Charles Dow said. Retail traders put their stops on both sides of the range. There is manipulation, a false move to one side, so that some market participants lose their positions and other enter trades in the wrong direction. After manipulation, an impulse movement in the opposite direction begins. After a manipulation, the price moves so fast that it is only possible to enter the trade on the market. Note, in this example, we have one PO3 in another larger one. The main long position accumulated in a large range and the short position in a small range. So, as I said before, PO3 works on absolutely any chart and any time frame. The more important the asset and the more money in it, the stronger it feels. I don't recommend trading illiquid shitcoins with PO3 without first analyzing the instrument's history. Finally, let's take a look how the power of 3 works on the weekly chart. On the weekly chart, we didn't see any sidewall, but only manipulation at the opening and growth. The same situation, but on the hourly time frame. The week will start with the price jam, which will last until Tuesday evening. Price removes internal liquidity, leaving external liquidity on each side. Expectation of manipulation. A manipulation takes place and setup is formed on a long on the lower time frame. Look, here price is manipulation the lows, but nothing has been taken off yet in this little consolidation. After that, there is an aggressive markup. This is done so that no one can enter and buy long position at the height. After that, greedy traders experiencing FOMO are at disadvantage. Maybe someone in the audience recognized themselves when they saw an asset go up and bought in hopes of continuing the trend. Now you know how things work and hopefully save